In today's video, we're talking about good debt versus bad debt. Now, most people would say that all debt is bad. Not always true. It's not about if you have debt, it's if debt has you. So, in today's video, I'm going to show you the difference between good debt and bad debt before you sign on the dotted line. This is Karen, your ex banker next door. Stay tuned. Now, what is debt? Debt is when you borrow money that you have to repay, usually with interest. Now, the interest will normally depend on the collateral, the tangible item that you have, either a house or a car. So, if you have one of those things that can be repossessed, the interest will typically be sort of low. But if your credit is really bad, they can kind of jack your interest up. So let's get that credit together. Now, debt can either build wealth for you or it can drain your wealth. Now, good debt can increase your income and your net worth over time. For an example, a mortgage. So when you have a mortgage, usually you're you're considering it's a liability at first, okay? Because if you just signed on the dotted line and you have this, I don't know, $2,500, whatever your mortgage is, and if you're paying that monthly, then in those first few years you have not developed any equity, okay? However, after there are so many years that's invested, that equity will grow. So that is considered good debt because you could either use that equity for many things, okay? And if you also have that mortgage, which is a home, we're talking about a home, that's a mortgage, then you can rent it out or you can Airbnb it, which is my favorite, and you can allow profit to come in to your pockets because of that. Also, what's considered good debt is student loans. Now, student loans, I know that they're astronomically high if you start getting more than what you need. However, if you're getting student loans to pay for an education, and you are working in the field, say for instance, it's an engineering doctor or law, and you're working in that field, you're making the money that will allow that to be paid down. But if you're getting a student loan and it's an engineering degree and you paid so much, or you've got borrowed so much student loan, but you're working at McDonald's, you're not going to have um, considered a good debt with the student loan. Another one is business loans. So a lot of businesses, when they want to get started, they don't have a lot of money. So you can get a loan or line of credit, and you can use that to profit your business, profit yourself in the business, and you can use that to pay down the loan. Now, bad debt is when you use it to buy things that lose value quickly. For instance, credit cards, material things. We're talking about cars, any vehicle. If you listen to Dave Ramsey like I do, he will tell you that anything with a motor depreciates in value. So you have to make sure that you're not paying too much for a vehicle that's depreciating in value, especially if your income is not to the point where you can pay for it. Bad debt also comes with high interest, and it makes it harder to save or invest for your future. So be aware of spending more than you can, because if you want to make sure that you can afford your present and especially your future, because the future is coming, you want to make sure you're spending way less than what you earn. Now, some examples of bad debt is going to be your high interest credit cards. That's if you have a balance on them. Now, if you're, you know, one of my type people where you want to make sure that you only get the cashback dollars or the points for travel, then you're paying that off every month. And it doesn't matter if you have a 33, 35% interest rate on a credit card because it's not going to come your way. You're not going to have a balance for it to be applied to. So if you're paying that balance down, typically I'm going to say when you purchase something, if you're just trying to get the cashback dollars or the points, once you purchase something, it takes 2 days to post. Pay it when it posts. Another form of bad debt is payday loans. There's a continuous cycle when people have payday loans because there's that interest and the fees they put, and don't let it be 5 days late or not paid in full. They'll tell you it's due on the 30th, but on the 15th, if it's not paid in full, they're going to attach a very high fee. So payday loans is an absolute no-no. Buy now, pay laters that you cannot afford. Now, of course, if you watch one of my other videos, you know that I love buy now, pay laters. But the way that I do it is two different ways that I set myself boundaries that I do not cross. Is I do not get a buy now, pay later that has interest. Yes, there are some things that I've wanted to get that had interest and I really wanted them. But there is no way that I'm going to sign on the dotted line for something that has interest. It's all about the no interest for me and the buy now, pay later. So if you know that even if you're getting one with interest, if you know that you can't afford it, that is going to be considered bad debt. And lastly, trips, financing, vacations that we're not being able to afford. So if you cannot pay for a vacation right now, then save for it. Not to say that you can't go on a vacation, you need to save for it. There was a time that I had to save for an entire year for my family of five for a vacation, and that's okay. So you just gotta make sure that you want to be rich in this season. Not to say that millionaire rich, but a comfortable retirement, even if it's 300 some thousand. You just want to make sure that you are setting yourself up to succeed and you're not getting in bad debt now and have to pay for it later. Now, before you get ready to borrow anything, you want to ask yourself these questions. Will this purchase make me money or will this purchase cost me money? So, even if it's something like a mortgage and you know that it's going to cost you money, but if your end goal is for it to be an investment property, so in the next, I don't know, 2 to 3 months, whenever you can get somebody renting that or Airbnb tenants to come in, short term tenants to come in, you still want to make sure that it's going to allow money to be put back into your pocket. And if it's one of those questions where it's going to cost you money, just make sure you can afford it. Another question you want to ask yourself, will it increase in value or will it lose value? Yes, everything with a motor will lose value, but you want to make sure that you're not overextending yourself. The goal is 25% of your take home pay for a vehicle. So if that's the goal. So even if it's 30 or 35%, you still make sure that you're not going too far over that marker where you cannot afford even to buy groceries because your car note and the gas is too high. Another question you want to ask yourself, can I afford the monthly payments? That's pretty much what we're saying about the car. If you are about to sign for something to borrow, even if it's a furniture bill, just make sure that you can afford it and you are calculating the cost before you sign on the dotted line. The next question you want to ask yourself is how much interest will I be paying over the life of the loan? I cannot tell you how many clients I have asked what is the interest on their car and they do not know. When I search it, 22%. So you mean to tell me that you could have been paying $150 a month for a car, but because your credit is so bad that you're paying 350 or higher? If the interest is going to cost you so much over time, and I know, and you absolutely need the car, then you want to make sure that you're dialing back a few months, preparing for this purchase, and you got your credit straight. Overall, debt isn't good or bad, it's your decisions that make it that way. A mortgage can become bad debt if you have more house than what you can actually afford. In one of my videos before, I let you know that my husband was approved for $500,000 on a home. Who finna? No, we don't need that. We can't afford that. On paper, according to them, we could afford it. But what they're not considering is the kids. Two of the kids are about to go off to college. What sports they're in. One is on a traveling dance team that costs $10,000 a year. The other one is moving to another state. So no, we cannot afford a $500,000 home, even if you guys don't know what our expenses are. You guys, meaning the banks. So even if they say you can be approved for it, because I've seen so many clients that say I can afford it. No, baby, they don't know exactly what your everyday expenses are. They don't know that you have somebody in private school or you got two kids that are in this expensive daycare. They don't know that type of stuff. You have to be the one to say, you know what, I can't afford that. So don't purchase too much house, because that's where bad debt decisions starts to come into effect. Now, student loans also can become bad debt when you get a degree, but you're not working in the field that you got the degree in. So if you over there hanging out at McDonald's and you getting an income at McDonald's, now I hear McDonald's is paying $20 an hour, but that degree costs you 75,000 in student loans. That's when it becomes bad debt. Now I'm going to give you the warning signs of if your debt is becoming a problem for you. If you are only paying the minimum payment on a credit card, if you're only paying the minimum payment, this is a sign, a warning sign that your debt is becoming a problem for you. Another warning sign is if you're using debt to pay for your everyday living expenses. Everyday living expenses like food, groceries, gas. This means that debt is becoming a problem for you. Now, when you find yourself constantly borrowing money to pay off other debt, this is another warning sign that debt is becoming a problem for you. When you find yourself feeling stressed to pay these everyday expenses, and when you're finding out that you cannot invest or save your money, these are another warning signs that debt is becoming a problem for you. When you are going to use debt, make sure that you get the smallest amount necessary. A lot of students that are in college, this is where they get caught up with the student loans. If the tuition is only $3,000, why are we borrowing $7,000? Let's not borrow the max. We want to borrow exactly what we need, so we won't be in so much debt, because that interest rate will be coming. Now, in my next video, I'm going to show you how to pay your car off and how I paid mine off. Okay. The last way that I want to show you how to use debt wisely is to not use it to upgrade your lifestyle financially. And a lot of times we are buying things for people, to impress people that we don't like. Like, I don't like her. She think that I'm not this. Okay, I'm gonna stunt on them. I love to stunt, but just make sure that you're not stunting on ghosts that could care less about what you got going on. I want to leave you with this. Not all debt is bad debt, but even when you are going to borrow, just make sure that you're doing it with a plan and not with emotion. Thank you for watching, and I'll see you in my next video.